Hello, everyone. Very good evening and a warm welcome to all. And thank you for taking time to join us in our webinar today and this evening. While we're still waiting for some of our participants to stream in, I'd just like to invite those who are already in the Zoom meeting today, just to use the chat function to say hi. Right, don't be shy. You can also use the chat function if you have any questions throughout today's webinar session. Now make yourselves comfortable. I understand that most of us probably have been at our desk all day working from home. So make yourselves comfortable. And for those of us who have not eaten, do take this opportunity to grab something to eat, right? And that's the advantage of webinar session as well, right? So today we are going to start right about now. In a couple of minutes time. I'll wait for a few more to join in. Right, so today with me, I have my colleagues from the advisory team. So you will see them with a bracket, a MoneyOwl, behind their names, right? So they'll be helping me answer any questions that you may have regarding the content that I'll be sharing tonight. And also if you have any technical issues, be it with Zoom or accessing any of our platforms, do give us a buzz as well. Yep. So once again, a very good evening to all. Thank you all for joining us this evening. My name is Albert. I'm going to be sharing tonight's session with all of us. I'm with the Solutions and Financial Literacy team at MoneyOwl. And basically my job is to help help people understand financial planning and also to help them take action towards their own financial planning as well, right? So today, I think without further ado, I should go ahead to honor all of you who are here on time. Right, so today we are actually on to our third webinar installment of the Demystifying Insurance series, right? So just a quick disclaimer, just to share with you, the information today that we are going to share is pretty broad-based, right? So if you still need to act on any of this, right, do seek advice with the relevant professionals first, right? So as I'm saying, right, we are on to the third installment of our Demystifying Insurance webinars, and tonight we'll be covering the topic of group insurance. Right, so I believe most of you decided to join in tonight because you have some queries, some questions about group insurance. But I'm pretty sure most of us, if you're a working adult, right, you would have encountered this at some point in time, right? It could have been when you were signing your letter of offer from your current employer and you were looking through the insurance benefits, right? So for the guys and some girls who may have served national service, right, during your BMT, I'm not sure how many would have remembered there were a group of guys who came down to talk to you about this insurance that probably at that time you weren't really too bothered to understand more. Well, that was me when I was 20 years old, and all I knew was to ask my friends, right? Hey, are you going to sign or not? If you are signing, I will just do as I'm told. So the question is, why is there group insurance, and what is group insurance, whether or not there is a role for group insurance in our financial planning, right? So this is what we'll be covering today, right? What is essentially what group insurance is, should you buy them? This will come at the back, yeah? Examples of some group insurance available in Singapore. I'll be splitting them into the two major types to explore further. Of course, we'll be discussing the pros and cons of group insurance as well, right? And lastly, I will just end off tonight's webinar with sharing of how is it. I'll just share with us the wiser way that we can actually plan for our own insurance needs. So I hope we are all ready. And I'll jump straight into today's session. So this is the definition of a group insurance, right? And this is actually taken from the MAS, right? And generally, group insurance is an insurance policy that I highlighted is signed by a legal entity. So it's not a person per se. So this legal entity can be a company, can be an association, can be any of that as long as it's a legal entity, right? So they are named as the policy owner, and on behalf of the group members of that legal entity, these are the insureds of the group policy, right? So group policies, it might interest you that it can be issued in the area of life insurance and also general insurance. So for those who are not that familiar with insurance, right, maybe I'll just quickly explain what life insurance is. So that's basically your death insurance, critical insurance, and your disability, those that we typically will meet with a financial advisor or an agent to transact, right? So those are what we call life insurance. And how about general business, right? General insurance business is basically your travel insurance, your motor insurance, and the likes of, right? So these are usually those that you do not need advice to transact. Yeah. So if I were to just share a little bit more, right? Group insurance can largely be classified under two major categories. So most of us are familiar with our employer or company insurance. So this type of group insurance is typically a mixture of your employer-sponsored schemes, and also sometimes there could be a voluntary participation. So in the case of maybe you find that you would like to add on to whatever is already offered to you by your employers, or increasing the coverage. Now, this type of employers' benefits, right, it can be classified under two major subcategories, which is your medical benefits and also life and critical illness. So specifically under medical benefits, we are talking about hospitalization cover, right? Of course, we have our GP and specialist visits as well. So this is the outpatient treatments that we're talking about. Some employers do offer dental coverage as well under your group medical benefits. Yeah. And on the right, we can see that there is another type, another subcategory of the employer group insurance that covers us against death and critical illness. And typically, this type of insurance cover is tagged to your current income or your pay grade, your employee corporate grading. Yeah. And the key differentiating factor of this type of insurance is that it is not portable, meaning to say, because your employer owns this, right? Should there be a day whereby you leave this current workplace, you are not able to carry on this coverage to the next workplace. Yeah. So this is largely what is the types of insurances that come under your employer and or company group insurance. I'm going to dive a little bit deeper onto the medical benefit side, because from a lot of our conversation with clients, right, this appears to be one of the areas that I think most people tend to have a lot of questions about. Yeah. And on the other end of the group insurance, right, we have membership and special interest insurances. So this would be like membership to a certain association, and I will share with us some examples of this type of insurances later. Mainly, this type of insurance, this type of group insurance is on a voluntary participation basis. Yep. They also likewise can be broken into two major subcategories: your life and critical illness. Again, this life and this death cover and critical illness cover is according to your current income, or it is by the choice of the insured yourself, right? So you can choose how much you wish to be covered under this type of group insurance. Now, there is another type which I think we are more familiar with, which is your general insurance, which I mentioned just now, right? Including your travel insurance that usually issued by the credit card companies, or rather the banks, right? When you use your credit card for payments, this usually come as by the way kind of offerings. It's definitely a good to have. And also in light of the recent COVID the COVID pandemic, right, insurers have also come up with COVID-related insurances in their group insurance offering. So some other forms of general insurance include your motor insurance, your personal accident insurances as well. So I would classify that as good to have. I shall not be going into detail, and specifically we'll be talking more about the life and critical illness cover for this type of group insurance and medical benefits for this type of insurances, right? So this is so perhaps the first question that we want to ask is, why is there even group insurance in the first place? Yeah, some of the possible reasons that I think is probably because this group insurance, typically they started its form as being offered through employers as some form of benefits to a certain groups, right? So today you could be a member of a certain association, right? You will tend to have a certain benefit as well, being a member, right? You're a client of a bank, for example, or you are employee at a certain company. This helps companies to attract talent and also to retain their existing staff as well, right, as part of the employee benefit. So working for the company, in turn, you get some form of coverage in the form of your group insurance as well. But perhaps, I think there is a point that most of us may not be aware of, is that in Singapore, for all employees working in Singapore, if you're an employee of a company in Singapore, basic health insurance is actually mandatory, right? So how is it being enforced? So basically for citizens and permanent residents, they will have mandatory CPF contributions, right? So mandatory CPF contributions goes into our MediSave account, and in turn, we will buy MediShield Life from there. So MediShield Life is actually our national scheme basic health insurance. So in that sense, we are already covered that base of this law that you need to have basic health insurance cover. Now, how about those of us who are on work permits, work pass holders, such as your work permit, your special employment pass holders, right? So companies can choose to buy private medical insurance or offer as part of a group insurance for some cost effectiveness as well. So talking about group insurance, I think one key feature of group insurance is that the group insurance actually offers economies of scale because of a very large participation base, and hence it will lower the cost of the insurance as well. And because of this very large base, right, typically group insurances, they tend to have less strict underwriting. Yeah, and because the group size is large enough, depending, sometimes the insurers may offer to cover some pre-existing conditions as well. Yeah, so for those of you who just joined in, not to worry if you missed the earlier part of tonight's session. Do feel free to get in touch with us. We do have this session that is recorded. I'll be happy to share the first part of what you have missed with you. Yeah. So moving on, what are some examples of group insurance that's available to us in Singapore? Now, I think for most of us, the biggest and most commonly talked about would be the MINDEF MHA Group Term Life Insurance, right? So currently this is underwritten by Aviva, and this would be something that I think most people are quite familiar with. There is a smaller one and an equivalent for public officers. It's basically underwritten by Aviva as well, and it's half the size of the MINDEF MHA Group Term Life Insurance. However, this is only available to public officers. The owner of this policy is the Public Service Division. Yeah. And for those of us who are members of SAFRA, there is a term insurance called the Essential Term as well. If you are a SAFRA member, you can actually have access to that. For those of us who happen to be NTUC members, union members, there is a group insurance for trade union members. Short form is GIFT. Yeah, this is you don't have to pay for this additional. It actually comes as part of your membership benefits. So this already included within. And the next two would be your employer's group insurance, and I can break it down further into life insurance, health insurance, and personal accident. So this comes as a form of benefit with your employment, right? And lastly, you have the other all sorts of group life, health, and general insurances, in a sense, those that are offered by the banks as policy owners. And recently, there is also a certain robo-advisor that has started offering group term life insurance as well, which I also share a little bit on that later on. Yeah, so this is not an exhaustive list. There is still many more types of insurance, group insurances available out there, but in the interest of time, this is just some of the bigger ones that are available, and probably 70% of us in this room today will have one of these type of insurances. Yeah, I just want to spend some time highlighting this class of insurance called the direct purchase insurance, right? The DPI scheme is actually not group insurance, right? So this DPI, although you buy it directly from the insurance company, you own the policy, right? And this is considered a personal insurance, although there is a cap of 400,000 in terms of the coverage, right? And it's typically cheaper. So people tend to have a misunderstanding that because it's cheap, I think it's group insurance as well. Yeah. So just to clarify, DPI is not a form of a group insurance. Yeah. So recently, I think during in light of the COVID-19 pandemic, right, I think insurers have realized the need that they need to keep up and stay relevant, right? And they have come up with this insurance that will cover some complications due to the virus itself, or some even cover the any complications after the vaccination. So the two examples that I have picked out are actually the holder of this policy is actually the banks itself, right? So on the left, you see DBS, and the right, you have Citibank as well. So these insurances are offered by the insurance companies. So DBS is a distribution channel for Chubb Insurance, right? So the insurance company is Chubb Insurance, and they are offering this COVID-19 insurance through their distribution channel of DBS, right? So today, if you're a DBS client, most likely you would have gotten some marketing emails or SMS messages asking you to sign up for these. And I think some of these insurances are free as well, right? So complimentary. So on the other side, we do have AIA, whose distribution channel is through Citibank as well, right? So this is also like the type of travel insurances that you often will see when you make a payment with your credit cards. Yeah, so this is something that is good to have, and since it's free, I do strongly recommend that if you are a client of any of these major banks, right, or if you're a client of the insurance companies direct, so not restricted to just the banks itself, right? Today, if you're a client of any of the major insurers, most of them would also have some form of COVID-19 insurance as well, that either protects you from the virus complications itself, or the vaccine if you suffer any complications from the vaccination. Yeah, so that's just a quick example. Now, moving on, I just want to share more on the employer's group insurance, also known as your employee benefits, right? I'm sure most of us are quite keen to find out a little bit more, because most of us are working adults here. So let's explore the next topic of employees benefit insurance. Now, this comes as part of your compensation and benefit structure should your employer have such arrangement. Now, the first thing I'll need all of us to do is to confirm with your HR, or just flip through your employment letter and or just go on to your employee intranet, right? I want all of us to revisit this topic and check out how much are you covered for. This type of coverage usually would be pegged to your employee grade, right? So of course, the more senior you are, the higher your coverage, right? Know how much cover you are eligible for in terms of hospitalization, right? Do make sure you know based on your employee grade, what is the ward type that you are eligible for as well. Do you have any specialist outpatient coverage there as well? So this would be in the form of your medical cards, right? Sometimes employers do give a medical card, and next, basically, it is the list of clinics that you should go to that offers this treatment that you don't have to copay, or sometimes you might have to do a bit of a copayment as well. Importantly, whether or not are there any exclusions, were you required to do any declarations at some point during your employment, right? So do clear this with your company, right? The next point I would like us to check is that, is this insurance paid by your employer? Is it sponsored by your employer, or premiums being deducted from your pay monthly, right? And probably you would also want to know how the premiums are calculated. And by that, I mean, do have a sensing of how the premiums will go as you grow older, right? So later on in the next few slides, I will also be sharing some types of insurance, some types of group insurances, right? They will have what we call an increasing premiums as you grow older, right? And they are age banded. So this is important to check so that you know and you can plan ahead, right? Don't wait until the time whereby it comes and then you start to rush around for solutions. Yeah. And of course, we will then want to check the portability of this insurance cover. Are you able to carry on this insurance cover should you leave the company? Now, I wouldn't say all employee benefits are non-portable. There are some that they offer. If you reach a certain level, they may cover you into your retirement years, right? Or they may cover you past your period of employment as well. But of course, typically this would come with the more senior positions as well. But perhaps I think the most important thing that all of us should know is that whether or not for our group employee benefits, right, whether or not our dependents are covered. Now, why is that important? Now, because once you are satisfied with your personal cover, right, as I always like to say, when you buy insurance, you protect the goose before you protect the eggs, right? The goose that lays the golden eggs. Once you have protected yourself fully, we want to check whether or not your dependents are covered. Why? Because this is especially important if you are parents of young children, right? And I'm sure that I do have quite a number of parents today with me in this session, right? This can definitely help us manage the medical costs, especially if you have young children who may require visits to the doctors quite frequently, right? So do check if your dependents are covered, and it can actually take quite a chunk out of your medical expenses as well, right? So moving on, how do employers provide this basic health cover? There are basically three ways, right? And I'm going to share the three ways that employers can provide the mandatory health insurance in Singapore. Now, the first is what we call transferable medical insurance scheme. This type of insurance is typically for the bigger organizations. Usually the case is when your understanding is that you have to co-pay a certain percentage of your bill during a hospitalization. Some employee grades may have 100% cover, so they may not need to co-pay anything at all. But typically it is a 80-20 co-payment, or a 90-10, 70-30, whatever it may be. So do check that out as well. This is owned by your employer, so it is a group insurance, but there is a feature of transferability and there's continuation of cover, provided your next employer is also on a similar TMIS scheme. So the danger here is that if you're on the TMIS scheme, right, it is important to also have your personal integrated shield plans in place, because these benefits typically cease upon either your retirement or when you are no longer employed, right? So the advice usually is just to buy when you're still young and healthy, and do not wait until your impending retirement, like maybe when you are 60 years old, all your working life you have been dependent on your employer group benefits, right? And this is the time whereby you may not be in a clean bill of health, and some coverage may then be excluded or even rejected. Yeah, so this is something that we want to take note of. Now, the second type of portable medical benefits offered by employers in Singapore would be your portable medical benefits scheme, right? So today, if you look at your CPF contribution statements, right, you should see this abbreviation AMCS, which stands for Additional MediSave Contributions. And usually this is pegged to your employee grade, or sometimes it could also be pegged to the premium levels of private medical insurance, right? So this MediSave contribution, I just want to highlight, right, that it is additional over and on top of your regular CPF contributions, working contributions. Yeah, so you should see your working contributions, which flows into your MediSave as well. On top of that, you will see another row of contribution, which is abbreviated AMCS. Right. So just a fun fact, right? MoneyOwl, as a company, we are actually on the portable medical benefits scheme as well. So you as the employer, you have the choice now of buying your own integrated shield plan with this extra contribution. So most likely, if you have been working for some time, you're not new to the workforce, you would have gotten your shield plans before joining the company. And this basically serves as a reimbursement to your MediSave accounts. Yeah. And lastly, the least common of all is probably this, which is for your employer to buy a shield plan for you directly. I would think this usually would come for those of us who are on work permits, right? And those of us who do not have CPF accounts. And this is typically an option. The biggest difference between buying a shield plan, your employer buying a shield plan for you, and the PMBS is that for the third option, your employer does not make any additional MediSave contributions. Now, today, if I have any employers in the audience today who are looking at this as part of your compensation and benefits structure, it might interest you that these three I actually took from MOM, right? And all three have got tax benefits for the company, right? So that's something that maybe business owners might want to consider as well. Yeah, so I've covered quite a fair bit on the types of group insurance. The biggest question that most of us would have would be down to your employer health insurance offering, right? So when we are talking about your employer health insurance, right, the single most oftenly asked question from most of our clients, right, is actually where do I claim from, right? Should I go with my personal insurance first? Should I go with my MediSave, or should I go with my employer group benefits, right? So specifically, I want to dive into hospitalization claims, right? For hospitalization claims, if you are on the TMIS and you have a personal integrated shield plan, right? The sequence should be like this. Number one, you should look to your group insurance first for claims, then go on to your personal insurance to cover whatever is not covered by your employer group insurance. Lastly, if it's still not enough, right? If maybe you still need some co-payments, you can tap on your MediSave now. There's a very good reason for this sequence that we follow, because number one, MediSave actually pays us a 4% interest on the balances, right? So it definitely makes sense for us to leave this high yield, so-called high yield savings account, right, all the way to the back. In terms of how we approach paying our bills. The second reason is also because there is this concept of the claim limits on your personal insurance. So this means in a year, you can only claim up to a maximum of a certain amount. And this can be many claims aggregated together across the period of a year. And this sequence of claiming, right, will help you preserve these limits for potentially larger claims within the year. And also there is this new thing that has came up recently, right? That some insurers now have this claims-based model, claims-based premiums pricing model. Currently, I've highlighted that in the market, Prudential, Great Eastern, and AIA. From my understanding, I think Aviva is going to come up with this claims-based model in 2022, which is next year, right? So maybe I'll just quickly explain what this claims-based model is. So for those of us who drive, we are familiar with the no claims discount, or NCD, right? It's slightly different, right? So instead of rolling down the premiums, if I do not claim, it actually penalizes me if there was a claim made. So I took this from Prudential, right? So this graphic basically explains to us that everybody starts off with a standard level premium, right? So if there was a claim, how this works is that the insurers will then look at the claim and decide which level they will escalate your plan to. And based on that level, they will then apply a multiplier to your standard level premium. So for example, maybe the standard level premium for your age would be $500 per year. If there was a claim that fell into level 4, for example, next year your premium will actually rise twice, right? By another $500, and you'll be paying $1,000, right? So the discussion on why is there this claims-based model, right, is definitely a topic for another day. But from my understanding, I think most likely insurers are going to be moving towards this direction as well, right? And we just have to be really prepared for that as well. And that is also one situation whereby I think the group insurance that you have will form a very nice buffer for you, right? Should you be, in need of hospitalization every now and then, yeah. And in terms of your group life and your personal life insurance, so I'm talking about the death payouts, your critical illness payouts, I think this is straightforward, right? We just claim from both the insurance together. No questions about that. It's quite straightforward as well, right? So everyone is quite quiet this evening. I'm not sure whether is my presentation quite clear or if you guys do not have any questions. So do feel free to make use of the chat, right? If you do have any questions at any point in time, and do stop me if anything is unclear as well, right? So moving on, I just want to move on to talk about the pros and cons of group insurance. I think this is also something that we need to know before making our decisions, right? And perhaps to guide us in our decision-making process, I would like to just introduce to those of us who are new to MoneyOwl, right? And I want to introduce the sequence of us buying insurance, right? And there is really 4 questions that we should ask ourselves. The first being, what is the purpose of you buying this insurance, right? Is it for medical expenses? Is it for income replacement? Or is it for alternative medical treatment that is not covered by your typical medical insurance cover? Okay, Zhirong, you have a question, right? A lot about Aviva MinDev, comparing it to Pojis, right? Thanks for the question, Zhirong, right? So essentially the difference isn't that great, right? It is like a half of the Aviva, the MinDev group insurance, right? Not much of a difference. Whatever that I'm going to share regarding the MinDev MHA can be applied for that for the Pojis as well. Just a point to note, the cap on the coverage for the Pojis is capped at 500,000 for death cover, right? And back to this, right? How long do you need the coverage for? You need to ask yourself the question, right? Is it until your retirement for replacement of income? For medical expenses, is it for the whole of your life? Third question I need us to ask ourselves is, how much do you need to cover? Is your coverage going to be 100,000? Is it going to be 300,000? Is it going to be 500 or 1 million, right? It depends on your needs. Then lastly, we come to the question, is group insurance going to fit the purpose for me, right? What are some of the considerations? What are some of the limitations as well, right? So some of the pros and cons include cost. Cost is definitely a pro for some, but it can also be a con for some, right? Depending on your age group, depending on the type of cover as well, which I'll explain a little bit more in detail later with the example of the MinDev MHA group term life insurance. Another Another good thing about group insurance is that typically it has a simplified underwriting process. And for a very simple reason, the group size is big, right? The risk is comparatively lower than taking on an individual insurance. And because of that group size, again, right, there are certain pre-existing conditions insureds may have, but they may be covered under the group insurance. Now, possible downside of group insurance is the portability. Again, this can work either way. Now, should your group insurance offer you the portability, that is actually something that works for you. But if you are not able to carry on this insurance, right, then it may work against you as well. And one of the biggest downsides of group insurance will be the age-banded premiums, which I have some examples later on to share with all of us. Now, there is also a loss of control over your policy because you are not the owner of the policy, right? So anytime the policy owner decides to talk new terms with the insurers, then you will be, you'll be subject to the changes that comes up along with that as well. And lastly, there is also certain limitations on payouts for some insurance, group insurance, right? In the form of maybe an installment payout, which I will explain more in detail in the next slide. Cecilia, your question on whether claims-based multiplier will be applicable to hospitalization indicated. In fact, it is already applicable now. It is not soon, right? And you're right, Prudential, Great Eastern, and AIA, they are already practicing this claims-based pricing model. Yeah, thanks for the question, Cecilia. Right, so I would just like to use a specific group insurance for the purpose of this comparison. And I would like to make use of the Aviva MINDEF MHA group insurance, right? For a very simple reason, I think most people talk a lot about it, and it's probably the single biggest group insurance that's available in Singapore, right? I wouldn't have time to actually go into the different types of group insurance and compare and contrast, right? Ideally, if I had the time, I would have wanted to do that. Yeah. So talking about premiums, right? If you're looking at personal insurance, your premiums will be actually guaranteed throughout the policy term. However, if you are talking about a group insurance, the coverage terms may change. It can be also terminated or negotiated at any time by the group, right? And for fairness, right, I just want to highlight that I'm just using Aviva simply because they are the same insurance company, right? In the area of death and total permanent disability payout, if you have a personal insurance, it typically pays you a lump sum, right? So let's say you buy $1 million, typically it will pay out. Your family will be expecting that $1 million check. Now there is a little caveat for the Aviva, the MINDEF MHA group insurance, which is if you have a sum assured, the coverage amount is actually more than 200,000. So let's say you bought $1 million of death and TPD cover, right? Aviva will first pay a lump sum of 200,000 and thereafter in a balance of 3 equal annual installments, right? So this is perhaps something that some of us may not be aware, but if you were to look into the product summary of the group insurance document, right, you actually see this as one of the terms and conditions as well. So if there is really a need, I don't think it's a big issue, right? But if there is a need for the full sum of $1 million, maybe you are intending to use it to pay off something, right? Then it may not come and it may come as a rude shock to your family members. Yeah. And moving on, in terms of how disability is defined for the personal life insurance, for the personal insurance, it typically has more lenient definitions, which I will have a slide on this to explain more in detail. For the MINDEF MHA group insurance, it does not pay out if you are unable to do certain activities of daily living, right? In terms of the advance payment benefit, right, this comes as just a benefit to the personal insurance, you actually get 100% of the sum assured. There is no limit, right? For the advance payment of terminal illness for the group insurance, you actually get 100% of the sum assured, but there is a cap of 400,000. So I have a question on the NTUC insurance, right? Whether or not you should remain or change because the panel doctors are limited and need to pay even more. Okay, Jay, thanks for your question, right? I will see if I have the time to cover it later on. So maybe you can hold on, allow me to finish up on this presentation first, right? So just some of the things that we want to take note of. And I think the biggest of all would be what we call group risk limitations, right? So this is in the event of acts of terrorism or war, there is this clause that limits the insurer's maximum liability to 0.75% of the aggregate sum assured. What this means is essentially today, let's say I have a total insured, sum insured size of, let's say, 100 billion, for example, right? All of these participants of the group insurance. Now, should there be an unlikely event of terrorism or war and many people were to claim together, let's say the death benefit, right? The sub-limits will then kick in, right? You may not get the full cover. In fact, you'll get a very small amount of payout, whereas there is no such issue with your personal insurance, right? The group risk limitation does not apply, right? Because you bought the insurance yourself, insurers will pay out accordingly. And there is also another feature of the Aviva personal insurance that you can actually increase your coverage amount by up to 50% or 500,000 without additional health underwriting upon your key life stage events. So some examples of these key life stage events would be getting married, getting a property, or your children attending tertiary education, right? So these are times whereby we may need to have an increased cover, but this is definitely not available for the MINDEF MHA group term life. Yeah, so I just want to zoom in on some of these points, right? And the first would be definitely in terms of costs. And I want to use the example of a male who is 35 years old and he's looking to buy $500,000 of death and disability cover to age of 65. So right now, we can see that the MINDEF MHA and the Public Officer Group Insurance Scheme, the premiums are actually fixed all the way through from 36 years old all the way to 65 years old. He will need to pay a total of $7,134, right? It's definitely going to be the cheapest. I've also taken an example of personal insurance, and this comes from Tokyo Marine. Incidentally, for this 35-year-old male, it is the cheapest available, and he needs to pay a fixed premium of $550.50 per year. Still very cheap though, right? Total premiums of $15,965. Now, there is recently this new robo-advisor who came up with the group term life insurance as part of their offering. I did a quick check on the product summary and found that they actually have an age-banded premiums. And what do I mean by that? So when you are in this age band, 36 to 40, you need to pay $685 a year. If you are in a 41 to 45 group, you need to pay $840 a year, and so on and so forth. And you can see that the premiums actually rise quite a fair bit, right, as the years go by, and you are getting older and older, and significantly much more premiums to pay as well. So I think the question would be, if today you are just looking for a very simple cover, death and disability cover to 65, your retirement age, right? I think this would be a good option for us, either the MINDEF MHA group or the Public Officer Group Insurance Scheme, which is essentially half of what the MINDEF MHA group term life is. Now, how about most of us where we have more complex needs, right? Most of us are definitely looking at some form of critical illness cover as well. And my colleague, Alvin, has went through in detail with us, right? What are the different types of critical illness cover and how do they affect us? And let's say, for example, today, that same guy wants to up his coverage to $1 million, death and TPD, 350,000 in terms of CI, right? This is what he would need to pay in the course of the policy, right? Just a little over 1,600 per year, total premiums 47,747. If he were to use the MINDEF MHA group insurance, you will see that again, the premiums are age banded, right? So in your younger years, it is much cheaper as compared to the personal insurance. But once you cross the age of 46, you realize that it starts getting more and more expensive as the years go by. So this is something that perhaps we also want to be aware of. Again, we want to look at it before we reach that stage and plan ahead, right? We don't want to wait until the time whereby, hey, we got a premium notification and suddenly you are caught with a rude shock. Hey, why has it doubled from the previous year, or tripled from the original premium that I was paying, right? So it's definitely important to bear in mind the costs, right? And in terms of cost, I just want to carry on the fact that the feature that this is actually taken from the group term life product summary. So looking at the 1 million cover, this is where I got the premium from, $41 for age 65 and below. But when you cross the age of 65, you realize that the premium actually jumps up by quite a fair bit, $588, and it does keep going up as you grow older, right? How about for critical illness? So this is from the critical illness rider. Similarly, right, let's look at 350,000. You will see that the younger you are, the cheaper it is, and it just keeps increasing the older you get. Whereas today, if we were looking at something that is personal insurance, right, it will be level throughout. Now, the next point that I want to come to is actually the coverage terms may change, right? So some of us may be aware recently, in fact, 2 years ago, right, the critical illness definitions have actually changed, right? And what if you were on the group insurance, specifically the MINDEF MHA group insurance, right? Aviva announced actually that this group insurance, the definitions will follow the 2019, right? So there's really nothing new about updates to definitions in insurance cover. This is basically done to keep the insurance coverage definitions relevant and also up to date with medical advancements as well, right? So that recent update was a move to really streamline the definitions and to reduce ambiguity in the interpretation of claim criteria, right? So it's not to say that 2014 or 2019 is a better definition, but which would be better able to serve your needs in the event of an illness, right? So we have actually written an article to discuss in depth about the changes to this critical illness benefits, right? Which I will share in the chat now. And I encourage all of us to bookmark it and revisit, have a read at your own free time, right? And we talked about what the whole gist of this definition change to critical illness definition change. Yeah. And moving on, terms of total permanent disability definition, right? I think most of us are quite familiar. Both group and personal insurance, they have some definitions that across the board. What is the traditional definition of total and permanent disability, right? So I will use the example of this outline of a human being, right? So the first definition would be definitely the loss of sight of both eyes, right? So both eyes unable to use, that is totally permanently disabled. Now, second definition would be the loss of use of one eye and the loss of use of one limb above the wrist or above the ankle, right? So one side or the other side can also, right? So either of these, you will be able to claim under total permanent disability. Or you can also have loss of both arms above the wrist, right? Or loss of use of both legs above the ankles. Or the last one would be a combination of either the eye or the hand, or either the eye or the the legs, right? So this is something that would be a good refresher for some of us as well, right? Probably we have gotten the insurance, but we may have forgotten what the definition was. And the second definition would be your occupational disability as well, right? So today, if you're unable to work, obtain any form of wages, right, or require any constant medical attention, this would pay out as well. Yeah. Now, there is one type of definition that is not covered under group insurance. Only personal insurance has this, which is the inability to perform either 2 or 3 out of 6 activities of daily living. So what is daily activities of daily living? Basically, you're transferring, right, from bed to chair, from chair to bed, your mobility, requiring assistance when you're walking, going to the toilet, dressing up, washing, and feeding yourself, right? Depending on your age, if you're unable to do any 2 or any 3 of these 6 activities, personal insurance will also pay out the total permanent disability benefit. Yeah. So that's so much on the different aspects to consider when we talk about group insurance, right? Perhaps I think the one most important is when we buy insurance, we want to make sure that our family is well taken care of, right? The limitation of group insurance policy is that we are not able to make a nomination of beneficiaries, and this is across the board, right? Not just the MINDEF MHA. All group insurance policies, you cannot make nominations because you do not own the policy, right? And therefore, death benefits will be made to your estate. Now, what this means is depending on whether or not you have a will written, the distribution will follow either the will or the Intestate Succession Act for non-Muslims. For Muslims, it will follow the inheritance certificate from Sharia court. Yeah, and definitely this is a very lengthy and troublesome process, right? So my advice to all, if you are using group insurance, right, do make sure that you have a will written as well to cover that bit of your payouts that comes from your group insurance, right? And very quickly, let me just move on to how does group insurance fit into my overall planning, right? Is there even a place for group insurance, right? Firstly, I would like all of us to take note, what are the various group insurances that you have, right? Be it the MINDEF one, be it the public officer one, the SAFRA, or any other employee benefit or membership insurance that you may have. Because some of these, the insurance are actually paid by you, some of it actually not. Now, generally, group insurance should serve as a complement to your personal insurance cover for the very reason that I have went through just now, right? All the different features, all the limitations, right? At MoneyOwl, we typically recommend our clients not to use anything more than 50% of, not to use group insurance for 50% of your total insurance needs, so that there is a balance as well, right? Definitely, I would like all of us to inform your loved ones about these group insurance, because sometimes they may go unclaimed, right? Maybe your loved ones only know of the personal insurances that you have, that you keep a file of, right? So update when necessary as well. Definitely, you want to write a will to cover your group insurance death payouts as well. Yeah. So coming to the end of today's webinar, right, there are some areas that I may not have been able to cover in the interest of time, but perhaps I just want to share this overarching principle of the purpose of insurance, right? So there are basically, insurance serves the purpose of giving us the peace of mind, right? We really don't want to use insurance, right? And it has to be there when we need it. And really, when we talk about insurance, it is like an umbrella, right? Nobody likes to carry around an umbrella when the weather is fine. But in Singapore, I think recently we see that the weather has been so random, right? It gets as random as it gets. And global warming really isn't helping our weather forecast either. So how I would liken it is that group insurance is really like the colleague or the friend who always brings the umbrella along, even for lunch breaks. And if it happens to rain, right, or it suddenly gets too hot, you can share in their umbrella. But not every day you will be going out with that colleague or friend, right? There will be days whereby you will be going out alone, right? So we don't know when it will rain on our plans. We want to make sure that we are very certain the insurance that we have are fit for purpose, right? So buying a personal insurance is really like having your own umbrella, even if you are alone. In the case of retirement, right? No more employee benefits, or you're no longer member to some of these organizations, you will still be covered. Anytime you need it, you will have control over how you want to use the plan, and you can use it in the best way possible to protect you from the elements. Yeah, so really that brings me to the final point of tonight. Should I buy group insurance? Yeah, so today, for those of us who are listening in, if you are looking to supplement your existing insurance, right, group insurance may be a good option. So depending on the age groups that I shared just now, right, it may be a good option to just top up, to bump up your insurance cover. Now, if you can accept the limitations of group insurance, the cost may be significantly lower for certain age groups, right? Now, for those of us in the audience today, we only have group insurance. So your employee benefits and your whatever membership group insurances, and your group insurance accounts for all of your insurance needs. I suggest it's high time that we do a review of your group insurance, right? Because when you need it most, you want to make sure that this insurance covers you appropriately, right? And I would like to strongly encourage, right, all of us to make use of the MoneyOwl platform to do a quick self-assessment at your own time, right? And I would like to invite all of us to our no pressure virtual shop, right? And if for those of us who are new to MoneyOwl, this is where you can actually get a sensing of how much insurance you actually need, right? If you can go on the guided journey whereby you find out what you need based on your life stage, what do you actually need? Or for those of us who are maybe a little bit more savvy, we are just looking to compare a few insurances here and there. We also have a comparator tool, right? Compare insurance. So feel free to do that. You can key in whatever that you require for comparison, right? And recommendations will then come out accordingly. Of course, at the end of the day, this is not a transaction in itself, right? Should you decide at your own timing, right? Should you decide that you would like to proceed, thereafter you can get in touch with us, and you could and get our client advisors to speak to you through your plans. If there is a need to further customize, right, they'll be happy to do so as well, right? So this is really a first cut, and I will strongly encourage all of us to visit. And just allow me to quickly wrap up what I have covered so far for tonight's webinar, right? So while it may be cheaper for a lot of younger individuals, right, we have explored this part that the premiums will actually rise significantly the older you get. Now, in terms, the terms of coverage may change from time to time, and it is at the discretion of the policy owner, which is the either your company or the organization, right, and the insurer. Now, we also talked about nominations, very important, right? We want to make sure that the payouts are timely, and we can make nominations to the right beneficiaries, right? And the recommendation is not more than 50%. So to answer Zhirong's question, right? What ratio individual to group? Really, there isn't a magic number per se, right? But really, whether or not your existing insurance portfolio is able to sufficiently meet and cover all of your needs. Yeah, so that's the more important question to ask as well. And definitely, this is not a straightforward yes or no answer. Should I just do, one of these plans? Should I just do another of the other plan? Right. So definitely, strongly encourage those of us who are thinking about it, who have still got further questions which I may not have been able to answer, right, in the interest of time, please do get in touch with my client advisors, right? And I do have a little something for those of us who are still with me, right? 113 of us, right? So for as a part of this webinar's exclusive, right, we have this ongoing promotions whereby we can actually further reduce our insurance cost, right? By up to 60% commission rebate, right? So simply just present this email to your client advisor when you are ready for the transaction, and we will do the necessary for you as well, right? And with that, I think I've come to the end just on time, and I really want to thank all of your participation tonight. Not the most complicated topic. I hope I was able to share with all of us what are some of the key areas to consider when we are looking at group insurance and our overall insurance planning, right? So for those of us who are still here, I'd like to invite you to leave us some comments, whether or not you enjoyed this, whether or not how we can improve for our future sessions as well, right? And yeah, basically that's it. And if there are any more questions, I'll still be here available with my team of client advisors. Otherwise, thank you very much to all. Thank you for your attention, and hope to see you soon, and keep safe. Right? Thank you and good night.